Well, hello everyone. Welcome to Short Verticals. My name is Barbara Armstrong. I am a coach with Schwab and delighted that you guys are joining me this afternoon. So what are we going to talk about? Well, we're going to look at different types of entries on short verticals, and we're going to look at, kind of when to say yay and when to say nay. So we're going to look at both examples that, might apply to our set of trading rules and logistics, and then those that don't quite cut the mustard, because I get asked a lot, how do you choose the examples that you choose, as example trades in our account? And so I thought I'd go through some of the process that I went through prior to this class and share that with you today. So that's what's on the menu for today. I invite you formally to join me on X if you haven't done so already. My handle is at Barb Armstrong CS. Cameron May is with us in the chat today. He's a friend and a fellow coach, and he is also on X and is posting on a regular basis. So you hate to miss out on the things that we have to share. So his handle at Cameron May CS. And just before we get into the thick of things, I'd like to remind you that options do carry a high level of risk and aren't suitable for all investors. Certain requirements have to be met to trade options through Schwab, and not all will qualify. We have to take transaction fees into account. We look at the charts, which is known as technical analysis, but we don't consider that to be appropriate as your only means of research. You want to be aware of what's going on with earnings, what's happening with the market in general, and we always take a look at that. And then the more information you have, the more informed is a decision you can make. We use the Paper Money desktop Thinkorswim platform to place our example trades, and it's a brilliant place to learn, to make sure you understand the trading strategy, the plan that you have in place, and what you're going to do both if the trade goes for you and if the trade goes against you. And today we're going to look at the current positions that we have on. Know that one of the differences or nuances between the Paper Money and the live account is that short options will never be assigned early in a Paper Money account, but that can happen in a live account. And we've talked about, often in this class, what one might do should that occur. And when we put in exits, stop losses, or targets, that these are requests, they aren't guarantees. Okay, so we aren't necessarily going to get out exactly when requested. We've got over 100 people with us here live, and to those of you especially who come in a little early and start, getting to know each other and trading ideas, I love seeing that. So hello to Randy and Paul and Jerry and AP514 and high speed, low drag. Like, some of these handles crack me up, and Will and Wayne and Bill and George and Scott and Ricebird and the rest of the gang. Thank you all for being here. I've got one quick announcement, and then we're going to spend most of our time on placing new example trades and then looking at the ones we're choosing not to use as example trades. And we're going to do a little bit of trade management as well, because there's one of our trades that is underwater, and I want to take a minute to go over that, because that was something that kind of blew my hair back when I first started, and I want to make sure I point that out. So my one quick announcement is that Miami, for those of you who would like to do a little travel prior to Thanksgiving, Ben Watson and Kevin Horner will be in Miami along with a host of others for a one-day market drive event. And these are fantastic. They start at, what's going on globally, what's going on here in the US, how might the change of administration in that White House in Washington perhaps impact the markets, and then on down to here's a particular stock and here's a way that a trader might choose to trade it. And you know what? They treat you like royalty. There's a great breakfast, there's a lunch, there's a reception afterwards. They're fantastic. And then we've got two-day workshops coming up. If you live in these areas and you're planning to attend, register quickly, because they fill up fast. And even though they're free to attend, if you wait till the last second, you could end up shut out. So consider yourself warned on that. If you've never been to a live event, I loved attending them as a client. I came into this business in 2011 as a client. I still love it going to these as a coach, now as a coach, because it's a chance to be surrounded by like-minded people, and we're all linking arms and figuring this stuff out together. And if you've been to one of our live events, feel free to type something into the chat. Yeah, so Jerry's saying he lives in Houston. No, they're free to attend. You just have to get yourself there. And we'll even pay for your parking. So yeah, they're great. And then it's a chance to meet other people that, like I still have friendships that came from my attending these live events, all around the country. It's been fantastic. Yes. Okay, so what's going on with the S&P? Well, up 25% year to date. I mean, pretty hard to characterize that as anything other than bullish. And, post-election, we saw the market, kind of crash upwards. And now we're seeing a little bit of a pullback. And, what do we call this? Well, potentially a bull flag. And today I was going to talk about, doing short verticals on indexes. And that was going to be my topic for today. But, sometimes the best laid plans go awry. And, although some might expect that this support level will hold, we don't have confirmation yet. Today the market pulling back a little bit, the S&P down, 1/3%. And so, tomorrow in trading a smaller account, if we see this bounce, we may look at putting some short verticals on some of the indexes. So stay tuned for that. So, but basically, nothing to say that this uptrend has been arrested. And again, another bull flag potentially setting up. We don't have confirmation yet that the pullback is complete, but this index up, neck and neck, the NASDAQ running neck and neck with the S&P. And of course, the NASDAQ 100, no financials. About half of it is tech. Yeah. But pretty strong. How about our Russell? The Russell just moved up so dramatically. And of course, now we've got this dramatic potential bull flag setting up. It's pulling back another 1% today, up 16% almost on the year, which is just not too shabby. And then the Dow. Do you catch a theme happening here? So, it also, and all of these indexes hit all new highs, all-time, highs last week. This index in fourth place, but still up 16% year to date, which is quite extraordinary. And where's our volatility index? Low. Man, oh man, it's been a while. Like if I bring up a 1-year chart here, this is the lowest we've seen, since, we hit a 1-day low here, but we haven't spent a lot of time in the last 6 months, like since June or July, below that 15 mark. And we're now down to 1397. Somebody's asking, will we get the Santa rally? Well, from what I've heard post-election is that it doesn't matter who wins. The market tends to be strong between the time of the election and the inauguration. Of course, that is no guarantee that that will continue. I think somebody is asking about where to find these registrations for live events. And you just want to go to Schwab Coaching, schwab.com/coaching. And I'll bring that page up. So here we are. And then you want to go to in-person events. And then you scroll down and just click on the one you're interested in. So now Houston is full, but you didn't hear it from me, but if you show up, they will find you a spot. Okay? If you show up, they will find you a spot because people are pretty optimistic, especially in December. about going to these events and then they start getting a little overwhelmed and, not everybody that signs up shows up. Okay. So, you can get the details here on where it's being held. It's at the Houston Marriott on Briar Park Drive. And if you go, you can register on site. Okay. So there's that, those in-person events. And like I said, I think they're pretty wonderful. Okay. So back to our regular programming. The last thing we may want to look at is, and I'm going to close this live news and bring up a watch list. And we're just going to come out to public watch lists and look at the S&P 500 sector indices. And when we look at these indices, this is a 4-week list. And this is 3 months. Now, I have no idea what S&P 525 means. So I'm going to come and customize this and just add description. And for this, I actually don't care about last or this percentage change. What I'm really looking for is, how it's done over either the last month or the last 3 months. And so now when I pull this up, now I don't need that S&P 25. What I want to know is what sector it represents. And so when we look at, the last 3 months, which sectors have been the strongest? Consumer discretionary. Which hit a new all-time high last week. And this is a 1-year chart. Let's come in a little tighter. It's sitting up close to its all-time highs. How about financials? Same. Communications? Same. So this is the Metas, the Verizons of the world, consumer discretionary. Well, that actually includes the car companies, but also the big players like Amazon and others. And then we've got industrials in 4th place, and that one hit a new all-time high last week as well. And then in the last 4 weeks, who's been at the top? Again, these same players, consumer discretionary, communications, and financial. So if you're saying, well, the market overall has been bullish, which sectors have been the most bullish? And then perhaps I could go and look for things within these sectors. Capiche? Capiche. Okay. So let's go out and have a look. And let's start with Costco. I was in Costco yesterday. Is anybody else a Costco shopper? It's like I always say, it costs you $200 to buy butter, but just because you walk out with butter and a winter coat and, a chicken pot pie and, who knows what else. But we can see here looking at Costco, it's up 40% year to date. And it's been kind of range bound, hasn't it? And we had done a short put vertical here, and sure that we're out of that vertical. And if you're saying, I kind of fell off the bandwagon for a couple of weeks, we've got earnings coming up here December 12th. And if you say you fell off the bandwagon, and how did that last trade work out? You can come here to Costco. Type in Costco, and we can see that on October 21st, we sold 3 short put verticals for 85 cents. That was our credit. And we bought them back for 12 on the 7th. And so, that was a successful trade. And why 12 cents? Actually, our exit order, if I were guessing, would probably have been 16 or 17 cents, because our example trading plan says we want to exit when we have 80% of our max gain. And if we want to see what the order was, it actually was 16 cents. So if you come back and look at the 7th, I'm guessing we moved up pretty dramatically on that particular day. And we did, which is why, and it could have also been a bit of a paper money fill, but we're now out of that trade. And to go out and try and sell another at this 870 level, it would be a very high probability trade, but we'd probably get very, very little premium. Okay. So if we kind of look at this support, or this was a ceiling around this 922 level, an old ceiling becomes new support, could we sell something below that 922 level? Because today it's come down and kind of nicked it. It's a red candle because we're still down below yesterday's high, but it opened lower and it's closed higher. And we have this doji, which at a support level is considered to be an indication that the trend, this pullback, may be complete. So one could look at that as a potential bull flag. But it's a more aggressive entry because we don't have necessarily a close above the high of the low day yet, which would be, this day here. Okay. So, but if we look at that and we come out and we say, okay, and you can tell that I was looking at some of these ahead. So in our example trading plan, and I'll show you where you see this. Now, this is almost $1,000 stock now, and we've had 729,000 trades or shares of the stock traded today. And so that would meet our requirements, although typically we want to see it be more than 1 million, not by the time we trade it, but 1 million shares a day. When we come down to the strikes we're considering, we want to see less than 10% for a bid-ask spread. So we've got a check there at 9.20. This could be $1.20 and it's 65 cents, so a check there. Do we have at least 20 times the number of contracts that we're thinking of trading? Well, chances are we're only going to do, if this is in our trading a smaller account, 1 or 2. And so we've got that as well. And I loaded here probability. Sorry. I thought if I just hovered over it. This is probability of it coming down and touching that strike. And this is probability of it closing in the money in the next 3 weeks. And if we're looking at 20 to 50 days, we would want to be out before earnings. And some people will do a short vertical as an earnings trade. We're trying to do this as a conservative, maybe a weekly income generating trade. And it's not that this is going to be closed out within a week, but if you layer these types of trades on, it can potentially start providing income. Now, you've got a plan because some weeks maybe things won't go according to plan. But if we wanted to be, if we looked at this 920 level and then we sell the 915, we get paid almost $2 for that. That's a pretty huge credit because our goal is to make at least 1% for each day we're in the trade. And if we come and look at this, if we get paid $1.95 and we're risking $5 minus that $1.95, that's divided by 305, that's a 64% return. So then the next question is, well, how bullish are you? Because this is at 620 and it may well have hit 620 today. When we look at this. Or sorry, 920. Yeah, the low today was 923. So that's pretty tight. And other people might say, well, I'd want to be lower than that. And we could do that. But given how bullish the market has been, we might say, well, you know what? We're just going to give this a shot. And make a note that it is a more aggressive entry. So we're going to come down here. 187, we are risking $300. We don't want to risk in this account. We're at 41,680. We started last November at 20,000. And at the end of December, we will reset the account back to 20,000. But we've just looked at a lot of base hits. We call this the base hit brigade. And I kind of have made this a companion class to that Monday and Friday trading a smaller account. So we are only going to do one of these because we're risking 300 and we don't want to risk over 6. So we're going to come up to first trigger sequence, right click, create an opposite order. And when this is worth about 38 cents, we would like to buy it back. Good till canceled. Confirm and send. How much could we lose? $308. How much can we make? $192. And we're saying, hey, if we can make, about what, 170, or sorry, minus 40, about $150 on that, we'd be happy campers. And we're going to come down to our short put vertical and say, more aggressive entry and strike placement on this one. And these are just notes that, especially when you're in paper money and you're learning, that you might just want to put in a note to yourself. Yeah. And the spread, we've got a $5 wide spread. We could make it 10, but chances are, well, let's go back and look at that. So if we did the 920, so this is a 60-cent spread, which seems huge. And this is 50 on the 915. It seems huge, but actually it's less than 10%. And that's our guideline. We'd love for it to be pennies, but we want it to be less than 10%. So if we made this 920 and 910, we're getting 350, and then the what's the advantage of a wider bid-ask spread? Well, the likelihood of it going through both strikes is less. That's one. Two, you're not paying for multiple contracts, but in our case here, we can't afford that, because then we're risking $650. Even though the idea is your transaction costs are lower. But, when you look at this, we're not getting double what we got. This is 350 at the 915. We're getting $1.80. So we're not getting 364. And, that difference would more than account for the extra transaction fees were you to do multiple contracts. Okay, let me just have a look. Yeah, a lot of talk about Costco. Okay, so let's move on. So we've got that one in the hopper. So there's our Costco. Let's look at PHM. So this is a home builder. If you're not sure what industry group it's in, we can come and look. Consumer discretionary. Now, some might argue that you need a home to live in. Others might say you could stay put where you are in the home that you're already in, or, wherever it is. But, if we look at this and we say, well, this is a stock that's up 26% year to date. If we look at the news, and we can come here to live news, they just raised their quarterly dividend. So dividend investors, might see that as pretty bullish. And so if we look at this and we say, well, what if it continues to go sideways, could we sell this 125 and get enough premium for it to be worth our while? Okay, so let's come and look. Say, okay, well, if we came out the same 3 weeks, this 125, 155, 190. Well, that's over 30 cents, 65, 75, 85, 90, 30. So that's 30 cents on $1.60. That's too wide, and we only have 12 contracts. So that's not going to float our boat. How about if we came out to December? Now we're 36 days in. And so, where before we were okay with maybe a 22 to 25% return, now we want a 36% return because we're in it, 2 weeks longer. So 285, 310, well, that's a little more appealing. Does this typically trade more than 1 million shares a day? Oh, where did my volume bar go? Okay, but you know what? Let's just assume for today that it does. And I'll fix that for the next class. I've been doing some stuff on the network and it's kind of been messing up my regular stuff. So we're looking at this 125 strike. we've got a 35% probability of it being in the money at expiration. That means we've got a 65% of it, chance of it expiring worthless. If we were to sell this vertical, we get $1.20. So what are we risking? $3.80. So let's come over, 120 divided by 380. Is there enough juice to make it worth the squeeze? 32%. It's not quite 36, but it's close. And so, when we look at the chart, we can look at this and say, do we stay or do we go? Now, some people might say we're below the 30-day moving average on this. So is this really what we want to do? And so I like to run a semi-democratic class here. So I'm going to let you guys vote on this one. Okay, so we're going to start a little poll. And I'm just going to type this in, PHM. Do we do our short put vertical on this one? And you can just say vote yay or nay. We're going to do 2 polls today. So that's the first one. Okay, so that's our first one. Let's come so we got in on Costco. Now let's come and look at Apple. So with Apple, it's up 18% year to date. It's been kind of consolidating, hasn't it? But it's bounced off this kind of 220 level. But if we're saying, okay, it kind of pulled back a bit on earnings, even though, it beat on earnings as it typically does. Could we sell this 220? And this is such a heavily traded stock. Could we come out to this 220? Will come out 3 weeks to December 6th. And what's the appeal of the shorter time frame? Well, the appeal is that time decay moves at an accelerated rate. And why do we care about that? Well, because when we have accelerated time decay, we're selling something and we want it to decay or to lose its value as quickly as possible. Well, here we're getting a 58-cent credit on a $5 wide spread. So yeah, that is not enough to wet our whistle. Even though there's tons of contracts, a 3-cent bid-ask spread, all of these things look check, 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 delicious. And then you may say, okay, well, what if we did the 225? Well, if I look at this and I say, really? Do I want to do this 225? Let me just change my line here to 225. Yeah, I want it to be below that support level or I don't want to play. And so on this one, nope. And you may love Apple. You may have all their products. You may think Tim Cook is the greatest CEO since sliced bread, but for this trade on this day with that amount of premium, pass. So, okay, let's come and look at a financial stock. Because remember, financials have been crushing it. And so here we have Goldman Sachs. And when I first looked at these today, a candle wasn't looking quite like this. So we're going to pass on that. We're going to leave it on our list. And I don't think that we still have this long call vertical because we are so far through both strikes. We got out of the week last week. We got out of like 13 trades in one day. They all hit our targets and then some. Okay, so we're going to wait on that one. How about Chubb? This is an insurance company also in the financial sector. And here's another one. Now, you may say, why is her line here instead of being under here? I like the way you're thinking. Now, the reason I didn't clear this out beforehand is because I just wanted to point out we had this cup and handle pattern. And based on this pattern, we drew where a potential target might be, which represented this range, which was about what, $27. And how close did it get? To within a stone's throw. So I just think that kind of stuff is fascinating. But we don't need these anymore. So I'm going to take that one off. And we're going to draw a new line on this. And we're going to come and where's our current support? Well, it's around this like 276-ish level. Now it's trading at 285. So, could we get enough premium if we went down to this 275? Well, let's see. We're going to come here. And this also only trades monthlies. Now that makes me a little nervous. Why so? Well, the reason for nervousness is that often when something only trades monthlies, the volumes on those monthlies are not super great. But when we come and we look at this one, we're not at the end of the trading day yet. And, and again, this isn't like a $50 stock. It's almost a $300 stock. It's traded, almost 800,000 shares. And then when we come here and we look at our open interest and volume, we've got hundreds of contracts. And our bid-ask spread, we wanted to look at that 275, 25 cents. So that meets our requirements. Now, the next question is, and, at this 275, this is saying we have a 25% chance of it being in the money. So you've got a 75% chance of it expiring worthless. Last question is, do we get enough premium? And earlier when I looked at this, we did. I wonder if we still will. Because this is live in the market, so things will change. So if we look at selling our vertical, 82 cents. So we know if it's $1, that's a 25% return on risk. And so again, do we want to come out and look at this and say, well, do we feel comfortable with the 280? And some might, like some just look at the probabilities. They don't look at all this chart stuff. But I'm a chart person. And it's like, if I can't get below that line of protection, my father-in-law was really big on medieval history. And I kind of think of it as like these knights lined up to protect, my position. And we've got knights here at 285 or at 280. We don't have much. And it might work out that well, but I want those guards guarding the line. And every resistance level I can get below is helping me guard that line. So, yep, another one. Yep, nope. Apple was a nope. Okay, how about we look at TJX? Now, this is retail. Discount retail, I might add. If you've ever been in a TJX. And so here we have like this double bottom pattern. The stock is up 28% year to date. Could we sell this 118? At this support level? I'm assuming it might become a support level. It did act as a ceiling and then it broke out. So could we come here and sell the 118? Let's see. So again, it's traded over 1 million shares a day, less than a 10-cent bid-ask spread. Don't have a lot of volume here. Only 4 contracts. That's not so great. Well, how about if we look at the 13th? Oh, that's even worse. We only have 2 contracts. And even though the bid-ask spread is okay, and then so you have to say, if we come back here to this 22nd, and I've got this, 11-cent bid-ask spread, let's just see. So here we've got a 34 cent credit. So we're risking 66. So that's about a 50% return on our risk. So if we look at that and say, okay, 33 divided by 66, that is 50%. And now we're getting 40. We're getting even more than that. So if we're okay with that, maybe we just put a note and say there wasn't the kind of volume, but the bid-ask spread was okay. And then how many of these could we do? Well, we could probably do, I'm guessing, about 8 of them. Would have us risking $528. Are we okay with that? Yeah, we're okay with that. And so we are going to come, so we have, put this in our, actually we're going to edit this because we're going to put in our target exit, first trigger sequence, right click, opposite order. And so when this is worth about 9 cents, and the numbers are all over the place. So let's just make it 8 cents. We'd like to buy it back. Make that good till canceled. Short put vertical. Fire in the hole. Okay, so our vote on that other trade was a no. So, you know, I like that you guys are into following the rules. Now, if you're new, you might say, like, this rule stuff she's talking about, like, what is she even talking about? And so if you haven't subscribed to the Trader Talks channel from Schwab Coaching on YouTube, you're going to want to do that. And one of the things that I created, because I am big on having, you know, the first time I make something, I'd like to follow a recipe. But when I first started trading, I was like this nerdy person. I created actually a checklist for every single trading strategy that I traded, and I'd go through and check it off. Like, so for a short put vertical, if you're saying, I want the trend on the stock to be bullish, check. Is that sector bullish? Check. Is the overall market bullish? Check. You know, and then just go through. And so I created some example trading plans, and these are just examples. And actually, some of this, you know, Cameron May used to teach a class years ago, and it was called Getting Started with Stock Investing. And, you know, it was what to buy, when to buy, how much to buy, and when to exit, and then routines. And so, you know, that's kind of the format that we follow. And I have those housed in our trade management mini session series. And because I'm teaching short verticals, and I often cover long verticals, we've got a trading plan here for long call verticals, long put verticals, and then also short put verticals and short call verticals. So if you're newer to this, you may want to tap into that. And it's just an example framework that you can use. Now, somebody's saying, can we find your checklist? It's like, I didn't create a checklist, but you can just go through and from that example trading plan, create your own checklist if you want one. And in the beginning, you're kind of going to go through and go, okay, check, check, check. And then you get to the point where it's just like, you know it, like you know it, like you know it. And you don't need the checklist anymore. You just automatically go through like the routine that we've been going through. Okay. Yeah. So that's where you find these mini sessions. And if you want to go back, like, and watch some of the classes, previous classes on short verticals, there's a playlist for short verticals as well. So you can, and if you're new to these strategies, and I always put a link in at the end if you're watching in the archives, there's also a Getting Started with Options series where we take 2 weeks, and 1 week is just all about short put verticals, and then the next week is all about short call verticals. So, which is kind of the bearish companion strategy to short put verticals. And then if you haven't caught the 7 things I wish I'd known, I might encourage you to check that out. These are just the things that I wish I had known when I got started on all of this stuff. Okay, so we do have 4 trades that we're currently on, and let's wrap things up today with doing a little review. And so, you know, our order on Costco has filled. We're waiting for this order on TJX to fill, and it's saying like, hey, we only want to pay you a penny less. So it's like, fine. So we're going to cancel and replace that. Say, hey, you know what? In fact, we'll do this trade for 34. If you really want to get it filled, sometimes you just give up a little, give up a penny or 2. Okay, so we've got those 2 trades teed up, and we had 4 trades that were on. And here's it. Lulu is plucking along. We're at 68% of, or almost 70% of our max gain. And so with this one, we were saying, well, we'd want to get out when we hit 80%. Do we want to just take the money and run? We put this trade on. It has 15 days to go. And so let's come look at Lulu, and then you guys can vote. So here's a stock that's still down 35% year to date. And here's our short put vertical here. Now tomorrow's Friday, and then time decay is going to continue clipping away. So do we just let this one go? We don't have a candle pattern that would indicate that it's, about to start pulling back, although it could. So my take on this is it's doing what it's supposed to do, and, to just leave it alone. We're just looking for another 10% on that one. Now, this is the one I wanted to really point out, Amgen, because we got into this the day after earnings. It had come down to this support level. And so when we look at this in hindsight, let me get rid of that. It had hit the support level once, twice, 3 times, and we entered the trade on this day. And then for some reason, it just tanked. And our strikes are at 310 and 305. It's gone through both of those. And then yesterday, it looked like we were having an inside day, which was hopeful. Today has found its bottom. We have 2 weeks left. But if you were in a live account, we've said here by selling the 310, we're willing to buy it at 310. And so some might say, well, I'm just going to take my loss now rather than risk it. Others might say, well, let's wait at least until tomorrow, because, this could be indicating that it's found its bottom and it could bounce, and we've got 2 weeks for it to make a comeback. Now, when we look at this, we're down 82.50, but we have a $5 wide strike. So we could be down, we're only halfway to our max loss, or just over half of it, because, we got paid we could be losing $295 on this. And so, and I used to think, like, if it was through both strikes, like, why even look at it? Because obviously I've got my max loss, but because there's still 2 weeks of time left in this, we're only halfway to our max loss. And so although I was going to vote on it, voting takes a bit of time. What we're going to do is we're going to wait until tomorrow. But whether this bounces or not, we are going to close this one out. Okay. No, this isn't earnings. This is a dividend. It's earnings is behind us. And this one doesn't, short put vertical, it doesn't expire. This one has 36 days. This is December 20th. Sorry, 310, 305. We had one that was earlier. So this one is the November 15th, I bet we got out of and did well. Okay, there we go. But I'll look at that November one, and then we'll talk about that as a point of comparison in an upcoming class. And you know what? Like it's random which contracts are assigned. Somebody's saying, what are the probabilities? The deeper it is in the money, and the closer it is to expiration, being deep in the money, the higher the likelihood. So if you are assigned, then you know, at this case, because it's below both strikes, you'd then sell it here and take your max loss. Okay, so guys, that's a wrap for today. I appreciate you being here. There are a couple of things. One, there's a survey in the chat. So if you do me a favor and fill that out, 2 questions. 1, I hated it. 10, I loved it, and everything in between. That would be great to see. If you type in a comment, I promise if you give me feedback, I will read each and every comment, as will the management team. Let me know if there are topics you'd like to discuss in upcoming classes. Hit the like button. Subscribe to the channel and don't forget to follow Cameron and I in the Land of X at Barb Armstrong CS and at Cameron May CS. Cameron, thanks for your help in the chat. As always, thanks to the people behind the scenes for helping make this look as polished and professional as it does. And thanks to each and every one of you. We'll see you tomorrow in Trading a Smaller Account. Up next, Connie Hill with Long Options. Bye for now.